Welcome to Finance Files, a podcast hosted by best friends Britanny Carter and Whitney Coford, with occasional appearances from Whit's dad, Greg Coford, and other guests.
We talk about all things finance, including investing, trading, capital markets, economics, and business management. Learn the investor mindset with us.
Disclaimer, this podcast is not investment advice. This is purely for entertainment purposes. You should always do your due diligence, which we will be highlighting in this episode.
And for the record, the companies we picked were picked at random. So again, if you're gonna invest in these, do your own due diligence.
We just chose ones that had a visceral reaction, which is why our first company is
Spirit Airlines.
What kind of reaction did you feel? That would be
my gut reaction. My gut reaction was absolutely no, I would never invest in Spirit Airlines. What was your gut reaction?
I just immediately think of poor customer service and delayed flights. But I was very curious to do the research here, in the sense that, Ryanair blew up over in Europe. Is there actually, an economic sometimes you're investing isn't because you like the company. You're investing is because you like the potential return that company is going to provide for you, right? And I will say, I know quite a few people that have relied on Spirit to get home for the holidays at a very affordable price, although they may have paid the price of their patience and well-being.
All right, so how should we do this? Do you want to start and just go through your whole process?
Sure. Well, or do you want to start?
Or should we do here's my first step? No, that'll...
No, I think one at a time.
Yeah. Okay. You want me to start?
Yeah, Whitney, I want you to start. I feel like we talked about me so much on Tuesday. I think that the world needs a little bit of Whitney first.
All right. So I'm going to screen share. So if you're just listening to this, we will talk through it, but this might be an episode where you actually want to watch the video, because we're going to do a lot of screen sharing today. All right. So I think I want to put a disclaimer on this, because I typically am doing due diligence on microcap companies, which are companies that are typically sub 150, 200 million market cap, and usually very low, below 75, 50 million market cap. Spirit's a little bit on the bigger end of what I would normally look at. But with that said, it was very interesting. So where I like to start my due diligence process, and Britt, feel free to interrupt me if you have questions as I'm going. I like to kind of see what's my first impression of a company. So obviously with Spirit, I already had a first impression, which was pretty negative, because the flights I've taken on Spirit have never been good. But usually the companies I'm looking at I've never heard of. So I usually go to their website and I just click through, kind of browse, read. Typically, I'll end up on the investor relations page. And then the first thing I usually look for is a deck. So, I looked through these, and here on investor resources, if you click on events and presentations, it takes you here where it's got their earnings calls, but I couldn't find a deck. So minus points Spirit, because where's your investor deck? That's weird. But anyway, so that's where I would normally start, is with the deck. So since I couldn't find one, and granted I didn't look that hard, they may have one somewhere else, then I jumped to their most recent news, which was this second quarter results. And normally I would do a really thorough read, to be quite honest. I just kind of skimmed through this. But these are some things that...
What's the first thing you look at? Numbers or statements, or what are you looking for at the moment you use? Because it's a big document, right?
Yeah, so usually, honestly, I'm looking at numbers first, because the things that I'm going to check for are do they have cash in the bank? Do they have any debt? like what's their, if it's a revenue generating company, which again, most of the companies I look at are not revenue generating, they're much more early stage. But usually I'm going to take a glance through the financials just to get a sense of like what's the current status. Um, so, and then I'll go back and start reading through in detail. So some things that stood out to me, because obviously I'm not going to make you guys sit here and read all of this. I thought it was interesting that one of their priorities is expanded guest-friendly policies. Um, but some of these I was like, duh, that's a no-brainer. And then some of these I was like, that, like for example, now they have to include the flexibility of no change or cancel fees. Well, that's because a law changed. So that's not them being like, oh, we want to be more guest friendly. That's them being like, well, we have to change this. And this change really cut into their revenue. And then, they're increasing the bag weight up to 50 pounds, which I'm like, yeah, every other airline offers that. So, like, thank you for doing
Wait,
the
so
bare minimum.
real fast, Whitney, how did you know that was a law change?
Because it says it later.
Okay.
So
All
that's why
right.
you gotta read the fine print and read the whole thing. I probably also would have Googled it, like, why did they make these changes? And that's a question I end up asking a lot in my due diligence is why? Why is it that way? Why did you do that? Just why? Um, so yeah, to me, I'm like, great, yeah, guest friendly policies. But then you read them and you're like, yeah, this is like the bare minimum for for being guest friendly. So I'm not really impressed with those changes. Um, Delivering on cost savings initiatives, I'm like, wow, that sounds great. But then as you read through it, to me, a lot of these read as this is actually going to take away even further from the guest experience. So, for example, they're cutting back on staffing. Another thing that stood out to me was they exited 42 markets and added 77 new ones. And the reason that stood out is because it made me think, how costly is it to exit a market and then go into a new market? So my question here, I would, if I were really going to consider investing in Spirit, I would really dig into this and be like, why are they doing that? And how much does it cost to go in and out of a new market? And what are the risks and rewards? And why did they choose those 42 markets that they exited originally? And then what changed? So like to me, this one little line brings up so many questions that I would want to investigate before making an investment decision.
Well, that's kind of
Um,
crazy that it was like 42 and then 70, and then does it give you how many markets do they say they're in total? That just seems like a lot.
uh, I think that is in here, but I don't remember it off the top of my head.
Okay, but
Yeah,
still, yeah, I mean, I think that's definitely. By the
yeah,
way, since it did pause a bit, we're at the, I don't know if you saw the 8 minute
yeah, I
mark.
saw.
Okay, cool.
Um, but yeah, good question. And exactly, that's like something I would really want to dig into the numbers and figure out why, what are they doing, what's their decision making process for this. Um, so here is where it red flagged for me that reduction, right? So primarily due to the elimination of charging for change and cancellation fees and competitive price reductions. Um, so yeah, then I was like, wait, why did they have to do that? So anyway, um, I also, this line, the reason I highlighted it is because I think it's a good example of how companies are just going to say what sounds good, but you really have to dig into what are they doing that is going to actually execute on this. So the line says, as the company executes on its transformational strategy, it anticipates that over time it will be able to drive improvement in total revenue per segment. Well, yeah, no, duh. Like, of course, we all hope that our changes are going to drive revenue. But so, what I would want to dig into more is what is this transformation strategy? What is the strategy? And in more detail, what steps are they taking and why?
I love that you're
Um,
touching on that, Wit, because I think that people are like, we talked about the fact that this is audited, these financial statements, they need to be accurate, but a lot of the like statements that are made, obviously they need to have them somewhat, they have that forward-looking statements, whole disclaimer at the beginning, because at the end
Right.
of the day, they do want to try and sell you on their company within the financial statements. This goes back to this is coming from the company. This wasn't
Yes.
an independent third party. This isn't an analyst report. This is the company, and it's trying to make sure that everyone that's looking at it is thinking it's a good buy.
Exactly. So I don't want to drag this out too long, but just to touch on some of the other things that I did end up looking at. So because they're cutting staffing and a lot of their cutbacks are related to staff, I was curious what their staff reviews are. And so I just did a quick search, and on Indeed.com it was 3.3. And I read through some of the reviews, and it seems like an okay workplace based on kind of the average review. And then for
I was
comparison,
impressed.
I know,
3.3?
yeah, like 3.3. I was actually expecting it to be like a 1.
Thanks.
So 3.3 I was pleasantly surprised by, but also I was like 3.3 is average, right? Like, and again, that's like they're doing the bare minimum at the very least, but yeah, I agree. I was a little surprised that it was 3.3. And for comparison, I looked at some other airlines. So Breeze is only at a 2.3, which I
Wow.
was surprised by because my customer experience with Breeze, I feel like has always been much more positive than my customer experience with Spirit. So it's interesting
Same.
to me that Breeze ranks much lower for employees than Spirit does. But maybe that'll change as Spirit starts implementing some of these changes.
Well, and you also have to
And
look at
then
number of reviews though, because that was
that's
50
true.
reviews,
Yeah,
right?
Breeze had 65, Spirit had 71,
Oh,
so
that's
not
actually
too
not that
different.
many. That,
Yeah.
but that makes me think, given how big Spirit is, like I wonder if they just had an HR person go and make people add a bunch of good reviews.
Okay,
Because
so
that's
it's
a
funny
thing
you
that
say
happens.
that because literally I had that thought. Like some of the reviews on here, I was like, that sounds like it was written by like an HR person. So, but
So
there's no way to know,
there's
right?
no way to
So,
know, but I will say Reddit is like one of my, I always double check on Reddit
yeah,
because I feel like that's one of the last unfiltered places on the internet.
right. So yeah, anyway, United had a 3.9, Delta had a 4.2, which again, that's kind of in line, right? Like Delta and United obviously have in general better customer service, they're higher price as well, so you know, you get what you pay for is the other thing. And then another thing I looked at, um, I was just because so Spirit's revenue, and I didn't really get into this on the earnings. I'm trying to like rush through this because I feel like I'm gonna run out of time.
Well, doing, I mean,
Diligence
what?
takes a while
This
is
is not
also
enough time to do a full due diligence.
no,
Another asterisk. Do not do
yes,
your due diligence this quickly.
yes, exactly. Like this is just a very high level summary.
Yeah.
Anyway, so one of the things I didn't touch on is that Spirit is they're not profitable right now. And that just changed in the last, I think, like year or so. So I was curious when I saw that they're no longer profitable. I was curious if travel has gone down, and it hasn't. So according to this article, the U.S. Travel Association, air passenger growth remained positive. It's up 6% versus the prior year. So there's no reason for Spirit to no longer be profitable from a macro perspective. But they're not profitable because of some of the changes that they've had to make. So um, the last thing that I looked at for this like very quick initial due diligence summary, which actually may make me reconsider my initial impression, was I looked at Spirit Airlines stock chart over the past year, and they had a major drop in share price in January, and I did not look up why. So that's something that in a typical due diligence process, something this significant, I would definitely look into the reason for that.
How
But
would
the
you look
fact
into
that
it? How would you
I
figure
would
it
go
out?
through their news and see if they had any news announcements around then, and if they didn't, then I would look at macro. Like I would think about like what was happening in the economy and the travel industry, see if there was something that could explain it. Um, and if I still can't figure it out, then I would probably reach out to their investor relations person and just ask, like, why do you think this drop happened?
So that's a
And a
good
lot of
call out. You can reach out to the company.
yes, Even in big companies, yeah, they'll
Right.
have an investor relations person. You may not be able to talk to the CEO, but they'll have someone you can talk to. Um, but so the reason that I might consider changing my mind on whether or not to invest in Spirit is because their share price has dropped significantly. They are struggling. And when I'm looking at a company, I want to think about, is this a contrarian play? Are they undervalued right now? And do I think that they can grow their value over the medium to longer term? And that's the question that I don't have a lot of confidence in with Spirit. So that's why I personally would probably not invest in this, because I would want to see some of their initiatives come into play. I would want to see some better customer service, because for me, like, you will never convince me that a company that has poor customer service can be successful and grow over the longer term. Like, convince me that I'm wrong,
Hard
internet.
stuff. Love that.
Anyway, so that's my process. So it's your turn, Britt. I'll stop sharing.
Can I just say that was such a treat to see how you approach it so differently than me. So it was so fun to just see a completely different way of looking at it. And I think, yeah, I'm excited. I think too, like it makes sense with our backgrounds and how we've approached different things.
Right.
So
Yeah.
let me share my screen. Okay, so actually, rather than going directly to the company's website, I always start very macro. And maybe that's because I was trained as an industry analyst, so I just focus on the industry. But especially if you don't know that much about the industry, and I know kind of in terms of I've seen all these reports, obvious, I knew just in from news that the airline industry was hit really hard during COVID, et cetera. Like I do have those, but I want a general idea of okay, how big is this market, right? Because they might be operating in a really niche small market where the growth opportunities are quite limited, right? And then I also want to see, is that entire market growing, right? Because it could be that you are like growing really rapidly as a company, but if the overall market's declining, there's going to be a point where those lines match, and it's just not a good fit. So two things I look at is kind of TAM and SAM, and I I guess technically, Spirit could serve a global market. Like the total available market would be the global market. But I kind of just looked at domestic. It's still obviously a huge market, 185 billion. So it's not like we're dealing with chump change here. But then I looked at so a lot of times when you search, it will show CAGR. And then actually, too, I just want to note, you can just search for these. The easiest way is just go into Google and search like airline market size. And my other little hack is go to Google Images and try and find charts there. And then like click through those because then you can usually find the data that way. I think sometimes when it's on the text one, it's a little harder to find. So I'll go to Images, mooch all the free report data you can find. If you're making a like multi-million dollar investment decision, then I highly recommend you pay for the full report and better understand the sources. But as we noted, this is a very quick due diligence piece. And like I said, I looked at a few different things and I just checked, hey, does this check out? Does this make sense? And like, for example, there was a government, oh my gosh, the Bureau of Transportation had stats in terms of the market shares of these different airlines. And like I was able to also like kind of reverse make sure that these numbers somewhat added up. And then I looked at what were they saying in terms of growth. And so typically industry analysts will use like a compound annual growth rate. And what that is doing is it's just averaging the rate of growth or decline over the next X number of years. So in the case of the domestic market, it was over 5 years. Global market was over 10. So that's there's like a few calculations you need to reverse it. I would just, in general, if you're doing high level due diligence, is it growing or declining, right? And then I kind of look at some other macro factors like volatility was very high for the airline industry. And so for that, for me as an investor, I would say I'm relatively risk averse.
And how
And
did you
there's
find the volatility for the sector?
I mean, I just did some general searches. I'm sure if you really wanted to, like, you can look at, even if you just look at these numbers and scroll down, I mean, they go from like they had losses in 2020. This one was more intuitive because it was an airline, but you can just look like what does the market look like? What do the major players look like in terms of variability between their revenue and profit? And I would highly recommend too, if you are looking at an industry and you're looking in a time that's relatively like we've had general strong growth, like COVID was kind of this weird outlier. Look during a recessionary period how that industry and major players perform. Like, for example, the boat building industry contracted in half during the recession because it's a highly discretionary purchase. So it's also good, like, if you know that there's a certain factor that drives that business, whether it's, like, for example, for airlines, oil prices are like very important. Look at the volatility of those markets and then see, okay, like oil prices shot up during X date. How did that impact the airline industry profitability during that period? Things like that. Like, I would say it's kind of almost going back to that gut, but like, you want to look at like how much they're impacted by all these different factors. And this one was very, even just from an intuitive standpoint, quite volatile. Um,
I just find it funny that ironically, Greg's Market Monday, where he talked about volatility, like we've come full circle.
yes,
Anyway, continue.
yes. But yeah, so then I also look at barriers to entry. So that's going to let me know, hey, if this company is a leading player, what's the chances someone can come in and just take over, right? And it's if the barriers to entry are low, it's a lot harder to become a market leader. And so when you think about barriers to entry, there's a few things. Like in this case, it's very high capital costs, right? It is so expensive to start an airline. So,
Step
Joe
one,
Schmo
get a
down the
bunch of
street,
planes.
huh?
Step one, get a bunch of airplanes.
Yeah, right. And so like Joe Schmo down the street might be able to start like, and maybe Joe Schmo's smart. He went to, he's got his master's in business and he's going to open up a coffee shop. Like the barriers to entry to opening up a coffee shop are drastically lower than opening up your own airline, right? So barriers to entry are high, which is good if you're an existing company because it means that there's going to be less competition. And then sometimes I look at like the overall market, like number of employees, number of businesses, things like that. I didn't look at it as much here, but that can be interesting to look at for just better understanding. Like, is it a high labor intensive business? How concentrated is it? I love the pill versus vitamin concept of looking at an industry because that's going to let you know how it's going to, it kind of leans into that volatility element, right? Is
What
this
what is the pill versus vitamin?
so the concept is if you have a like product that is a pill, like let's say you have a raging headache, you're very likely to purchase the pill, the Advil or the Mez, right? But if it's a daily multivitamin, it's more like, oh, that would, maybe give me a bit more energy today, but it's not like a need, right? So you want to think about how vital is this business? And obviously, there is a vital element to the airline business. People do need to get across the country for health reasons, for what have you, but there's also a very discretionary element to it, right? So it was I would say it's mostly vitamin, but limited pill. So that lets me know it's going to be a little more volatile. I also think about what are the costs associated with that business. Obviously, incredibly high fixed costs here. So what that tells me is if there is an economic downturn, they're going to have, or like something happens with the market, they have less flexibility in terms of their ability to respond to that and are more likely to operate at a loss, which is very much what we saw during the recession, right? Um, Another thing you want to consider is seasonality. If there's certain fluctuations during the year or it's impacted by the weather, and it might sound very like nominal when you think about maybe like the airline industry or something where it's kind of more holiday based, but if you think about even like maybe you're investing in something where farming is like a big deal and you need to think about the weather patterns, or it's ice cream, like ice cream shops, like I know it sounds silly, but like if you have a very short summer period, that can impact your business. So you want to look at like, are there fluctuations year over year based on these factors? And then I just looked at key drivers. So oil prices, obviously super volatile. Economic conditions can be, it's obviously a highly regulated industry. And then I think too, I just added in here internet and remote work because, one thing I did just totally glanced over that business versus personal travel. So that was another thing I wanted to look at is like, who are their customers? And obviously you have the everyday customer, like the everyday consumer that's going for leisure, but business travelers, despite only making like 12% of airline passengers, they pay significantly higher rates and are typically twice as lucrative.
Yeah, you're gonna buy your first class ticket for, a business expense versus discretionary travel. Not buying that first class ticket.
Right. Well, and if you like, if you want to book a flight to Tahiti, you're going to try and like get the best price. Whereas if you have to be in Greenville, South Carolina for a meeting on Monday, you have to be there on Monday, right? So, and then I always like tend to tab where I get my information from a bit. Um, Anyways, and then this I did use ChatGPT. Like I was so blown away. And I get, yes, I totally agree, Whitney. If you are making a big financial decision, don't just take these numbers. But it's good for getting, like, I was able to get this very quickly. I looked at the revenue, I looked at their profitability or lack thereof. I looked at their market cap. And then these were just, I kind of wanted to see like the total. What I did is I took the top airlines in the industry, and it's obviously not all of them. There's like Breeze and stuff, but honestly, this is an overwhelming majority of the market. And I just kind of looked at like how are they performing relative to their peers in this regard. And I wouldn't necessarily do this with all like how I would structure it might be different if it wasn't such a highly concentrated industry. I'd probably look at it like I would probably try and find year over year market share percentages, or if I like am doing the free model and just taking, I have like maybe two numbers to work with. Maybe I do like prior 5 year, like the 5 year mark, and then 5 years to present, right? But just looking, and they obviously did well during the recession in regards to just like their share, since they are like everyone was freaking out about price at that point. But if you look, they obviously, I mean, they actually operated a operated profitably in 2021. But looking at like their percentage of like how they actually like increased their share like relative to others before. But then now that the economy is recovered, we've seen like a drastic drop in terms of like how much share of revenue they have. I mean, I guess it's not too, oh, it's actually higher than before in 2019. But then I looked at like the average stock price, right? And then also the price to earnings ratio. And they're still operating at a loss, whereas like many of these companies recovered. And
Right.
this is what I thought was interesting is like I would normally never invest in a airline, but you could argue that like if the stock price dropped drastically, I mean like if you had bought it in 2020 and you'd said, "Hey, I know airline business is going to be fine at the end of the day, like this is COVID isn't going to last forever." You actually could make like a spread, but I don't think I would have. I don't think I would. I honestly, just doing this macro and the high volatility, I would never invest in any airline personally.
You're like, I'm out. I'm out. Don't even have
No,
to look.
yeah, it's too volatile for me. I think there's too many factors here where like I don't even care if I love Delta. I'm a Delta girl. I think they have great customer service, operational excellence, etc. Love that they donate such a high percentage of their profits to charities, but like I don't want to invest in them because I don't think like I think this business is way too volatile. And like you can see like even the market leaders can end up operating at a loss, and it's got really high fixed costs. So I think like macro alone, like I started getting a little too in the weeds there with like the company. I just looking at the market, I'm not interested, right?
Fair.
But yeah, if you just look at like the average stock price, like it's dropping. It's just, and I think Whitney, you really touched on a lot of just the general factors for why that stock price is dropping and why it isn't performing well. This is just obviously a no for me. But it
Yeah,
was fun to explore because I was like,
for sure.
maybe they're like really secretly profitable. And we are now at 30 minutes, way
Longest
long,
episode yet.
longest episode yet. But honestly, too, I you should do due diligence for much longer than 30 minutes.
Yeah.
So I feel like we condense this down a lot.
All right. So tomorrow, Fundamental Friday, we'll do two more companies. This time looking at a big cap company versus a micro cap company, and we'll do a little bit more on due diligence. So join us tomorrow on Finance Files.